How are you guys? Right. So here I'm actually looking at gold. Right. I'm looking at gold now, and we're just gonna look at all the potentials, or the potential setups that actually played out during the week of 14 October and 18 October 2024. Right. So here, what I have just um, did. Right. So what I have done here, I have actually marked my Asian session boxes, right? I've marked my Asian session boxes. So let me just do quickly and then just label them, going with the days. That's Wednesday, that's Thursday, and that's Friday, right? So if you can look at what's actually transpiring here, we are actually paying attention to a bullish market, right? So whenever the market is bullish, what do we do? Actually look for a potential for buys, right? But it doesn't mean that sell setups cannot play out, right? Sell setups also do play out. That's actually possible whether we are in an uptrend, right? Sell setups can also play out, right? So yeah, I'm just gonna spot the the setups that were actually possible during this week on gold, right? So if you can see what happened here, we actually had a break of market structure. This was actually a break of market structure there, right? A break of market structure before this was created on Friday, right? And then when the market opened, it had to push to the downside, right? And then you can see around 3 in the morning, around 4 in the morning, the market started rallying to the upside, right? And then around around London open, right? The market started pushing to the downside, right? Started pushing to the downside, giving some sales, right? Push to the downside, give some sales, right? And then we were actually going to be looking for an opportunity for buying here. So if we are paying attention to whatever that is happening here, right, this was actually an accumulation, right, or a demand zone, right? And this was also a demand zone created when this market gave sales there, right? So if we are to highlight that demand, right, if we are to highlight that demand, right, we are definitely going to be paying attention to these levels, actually going to be paying attention to these levels, right? We're going to be paying attention to these levels, right? Why am I saying we are going to be paying attention to these levels, right? This was actually a bullish candle before this market went up, right? We had this bullish candle, 3 candles to the downside, and then the market started going up, right? Which means marking these highs, right? This is where we broke this level, giving a bullish structure, right, during the Asian session, right? So this is the most area that we are going to be focusing on. So this is the demand that we are paying attention to, right? So for us to get buys here, what was the thing that we're definitely going to be looking at? We're going to be looking at this demand zone, right? This accumulation that was created here. So if you can see, this is a sequence whereby we're bullish, went up, we created a higher high, we came back, we created a higher low, and then we created a higher high. So the next thing that we're expecting was to see a higher low, and then maybe we create a higher high, right? So with gold, it's different from those other pairs that we're actually looking at, right? So if you can see, if this was the potential area for buying, it means we're actually going to be putting a stop loss right below that Asian low, right? Which means that here we are definitely going to be looking at a setup for what? For 1:2, right? And then looking at the structures, for you, instead of being greedy and looking at this market actually continuing, right, going upwards there to create a higher high, right? You also need to pay attention to these structures here, right? These structures here, you need to pay attention to these structures here, right? So if you can see here, we actually have a bearish order block on this structure, right? That's a bearish order block there. If we are to mark that bearish order block, you see this is the candle that I'm actually talking about, right? So if we can drag this to 1:2, you actually see that to that area where we've spotted that bearish order block, this was definitely going to be the level where you're going to be looking at taking out your profits, right, at this level, right? And this was actually giving us what? A 1:2.33 risk to reward ratio, right? Your entry here when they come and trigger within the demand, the demand zone, right? And then give you buys. And if you can see the buy that came out here, it was actually two 15-minute candles, right? 15-minute candle, 15-minute candle, and then the setup was what? Was complete, right? So this was the first setup on Monday, right? And this was during New York session, right? And if you can see, after they came for this point of interest, they started coming down, giving sales, right? Giving sales, and then we came to another Asian session, right? So during this Asian session, you can actually see that this was the lowest um, point that was created during the Asian session, right? And then the market started going up, going up, going up, going up, right? And this was actually around London session actually started here. The market went up, right? And if you can see with what happened here, when the market went up, it actually gave a change or a market shift, right? This was a market shift structure that was actually created here. Why am I saying so? If you can see with what happened here, instead of us creating a high, we had to go below this higher low, right? Which means we created another lower low here. And then the market just didn't break up this levels and respected and then dropped down, which means here we also created a break of structure to the downside, right? This was a break of structure that was also created to the downside, right? With the motive of changing this direction, giving more of sales, right? But with what happened here, you can definitely see that after we got in this break of structure, we had to break above these highs. So this is where I'm saying the market shift happened, right? So when this happened, we had this down here. This was an imbalance, right? This was actually an imbalance left on that structure where those played out, right? When this market started buying, right, during the London session, right, it actually created an imbalance there. And if you can see with what happened here, the market actually had to come back. So this I usually call it an AR50 AR50 trade because it came as far as 50% of the Asian box, right? Of the Asian session, right? So this is where we're definitely going to be seeing some entries, right? Are exactly around quarter to two, right? This was the first entry. They went up, they came down, right? And then all of a sudden they started pushing to the upside. So here the stop loss was definitely going to be going below that Asian low and looking at a 1:2. So if you can see with what happened here, we actually had a good buy setup, right? Actually gave us what? A 1:2. So this is the setup that actually played out on Tuesday, right? This setup played out on Tuesday, and that's an imbalance there, right? This setup played out on Tuesday. So this was a 1:2 trade that played out, risking 91 pips to make 186 pips. This one we were risking 47 pips to make 100 and what? 111 pips, right? And then going to Wednesday, right? You can see our Asian box there, right? From the previous day there, you can see that we then created a break of structure here, right? Remember, we are following the bullish pattern. We're actually following the uptrend, right? Here, a break of structure was also created, right? That was a break of structure created there, which means the market was showing signs of buys, right? So if you can see Asian session, right, it was going up, going up, going up around London Open. The market was still going up, right? But this is what happened, since we had this break of structure, right? Looking at these structures, this was the most influential area of interest that you can actually pay attention to. Why am I saying that? Right. So if you can see with what actually happened here, if we are to check when this market broke this resistance, right? When it broke this resistance, it went up to a point whereby it then later on retested this level here, retested this level here, right? And then they actually broke this previous higher high, right? They went up, right? And if you can see with what happened here, the market started dropping during the London session. It went up, and then during the New York session, the market started dropping to the downside, right? But this is the area of interest, right? This is the area of interest, which means there was a possibility for you getting entries during what? During 6:30, right? That was 6:30, yeah, during 6:30, right? So you're just gonna come look at these highs that were actually broken here, right? These highs, come and put a trend line to there and gauge for an area for pullback, right? So if you can even take the Fibo, put it here, and then stretch it like this, you actually see that this market actually came back and respected the 79% level. Which means if you were to get your entries here, your buy entry, we're just gonna come and get that buy entry here after that bullish engulfing candle was created there. This was showing that this market wants to actually push to the upside, right? And then putting your stop loss below this accumulation, right? Below this demand, right? So you can actually see that the market started pushing up, right? So this was actually a late entry. What can I say? Not actually a late entry trade, right? But you could have taken this trade during the during the you call it what, during the end of the New York session. This was still New York session, right? Since even though we overlapped into Asian session, right? This could have been an opportunity, taking your entries around 6, holding your trades to give you something like a 1:2, since our 1:2 is actually around this point, right? So this trade was actually going to be overlapping into Asian session, which is actually something that is also not bad, right? There was a 1:2 given here, and it was also a good setup, right? And then if you can also pay attention to this, we also actually had to get a break of market structure there. This was actually a break of market structure, Then the market came down again, right? Around this accumulation that was created here, the demand zone, right? It came back for that, right? So, which means the following day after Asian session, this was exactly around the New York session, right? So if you are to come and mark our demand zone, this was definitely going to be the demand zone, right? So if you can see, the market dropped, coming back to that demand zone, right? And then this is what happened when it paged within that demand zone, which means the trade that you would have taken here, you could have closed it. You could have closed your 1:2, right, before they dropped, right? Which means this was a thing whereby you were also going to be waiting for a trade, because this was going to be closed around 12:15, right, during the day, and then maybe you wait for another setup to play out during what, New York session, because I have seen that gold usually present good setups around New York session, right? Especially during New York session, you tend to see a good liquid market, right? It's very volatile. It tends to move very well, right? So if you can see, it came back again for this demand, right? It came back for this demand. Did I save that template for the demand there? Right, right. So it came for this demand. Let me just say D here. So that it can be easy for you guys to actually understand what I'm trying to explain here. Right, D, right, right. So let it go to the right side. Right. So this was the demand, which means this was an opportunity. Again, after you've closed that trade at 12:15, right, South African time, you were actually going to be getting another entry exactly at New York Open, which was 2:30, right? This was actually 2:30. An entry there, your stop loss below these lows, right? Your stop loss below these lows, and looking at a 1:2, which means your 1:2 was definitely going to be fulfilled once we give a break of market structure here. All right, so if you can see, this was another break of structure, right? Observed there, the market broke to the upside, right? And then if you can see, this was actually none of your business. You could have hold this trade and move with it since it's an uptrend, right? But your 1:2 is definitely going to give you something like we'll go back and then count the setups that we actually had within this week, right? So if you can see, break of market structure given, another break of market structure given here, which means we're actually going up. We're within the uptrend, and we're seeing this break of structures created, showing us that this week was actually giving more buys, right? Potential of buys, right? Potential of buys. Sales, they're actually there. Structures for sales, they're actually there. But the most win rate that you could have gotten within this week was focusing on getting what? Buy setups, right? So if you can see during Asian session on Friday, around the London session, right? The market was actually dropping to the downside, right? Asian session was actually buying. And then we come to a point whereby we actually created another break of structure, right? This was another break of structure, which means we're actually expecting to see this market continuing going upwards, right? So if you can see with what happened around 2:30, right? We took out somehow we can spot out this as liquidity, and then this market sold to the downside, right? But since we're still expecting buys, the only opportunity that we're actually going to be getting here, you are going to be paying attention to this. If you can see, the market went up, it went down, right? It went up, it went down, right? And at this point, it was supposed to be giving us sequences for sales, right? But here's the point whereby it gave a change of market um, structure, right? It gave a market shift. It actually gave a market shift here. And if you can see, we also have areas where we are spotting imbalance. So if we can use our gun box coming to these levels, you can actually see that, right? Coming to these levels, to be precise, you can see that this imbalance is actually within the equilibrium level, right? And then we have our premium level with our discounted level here, right? This is within the equilibrium level. So the most effective order block that you can, sorry, imbalance that you can pay attention to was this, right? Which means this is the imbalance that I wanted to see gold reacting on, right? So this is where the entry was definitely placed here, right? And then looking at putting the stop losses just below this previous point, right? And then looking at a 1:2 risk to reward ratio until maybe around 4, right? If you could have even hold this trade, it could have also given you what? A good 1:2, right? But if you can see, mostly the most effective way is to target the previous highs, right? So if you are to target these previous highs, you'll definitely see that, okay, if we are to adjust these and bring it at this point, right, and then adjust this slightly below those points, we're definitely going to be getting a good, precise 1:2. And this was actually 112 pips, risking 53 pips, which was good. So within this week, we actually had 1, 2, 3, 4, 5 good setups created. And all of them, if you can look at them, we're actually spotting buys because from where we are coming from, gold is actually bullish, right? It's giving more of buy structures, right? Which means if we want to get a high win rate, we actually need to pay attention to what? To potential buys, right? So if you can see, this was actually 2, 4, 6, 8, 10% within this week, right? This was actually 10%. If you can see, this was definitely going to be paying you very well. Even if you were to be trading a smaller account, you know that once you're looking at 1:2s, right? And risking, let's say maybe 10% of that account. Let's say you're trading a $10 account, right? You're trading a $10 account. You will see that, okay, even if you are risking 10% of this, which is a dollar, right? And which is actually also unnecessary on gold, right? But let's say you were risking maybe a $2 on these setups, you could see that we're definitely going to be making maybe $4 on that setup, $4 on the following setup, maybe $4 on the following setup, $4 on the following setup, $4 on the following setups, right? Risking $2. And you could see this could be 4, 8, 12, 16, 20. So you're actually going to be making a $20 profit on your $10 account, right? So this is how we are definitely going to be looking at the markets, right? So the reason why I'm actually doing these videos is for you guys to see how I actually look at the market, how I analyze, how I try to find possible setups, right, within a certain week, right? So the reason for these videos, if you guys can be able to watch this and see, okay, this is what he actually pays attention to, this is what he actually pays attention to, it's also going to be easy for you when you go on the charts and then maybe you are looking at the trend where the market is going, or you're looking at the market mechanics, the structure, the market structure, where the market is going, is going to be easy for you to actually benefit, right? And get some good setups, right? From from these assets, right? From gold, right? Or any other pairs that I've also shared with you, showing you potential setups that actually played within a week. So thank you guys. Thank you for sticking up until to the end of this video, and make sure you subscribe, right? Subscribe, also share, like the video, comment within the comment section with your questions and maybe whatever things that you also need to add on, right? This is where we actually share and advise each other in growing within this industry, because the problem now is people, they always fight against each other. Someone tries to prove whatever strategy that they have, it works more than this other trader and so on, and then we're actually compromising things and um, affecting the industry, right? This is where we need to actually get together, learn, and then you learn and then share, right? And then what you need to know is every strategy actually works. What's important is you being patient enough to wait for setups to play, and also have principles and rules whenever you are executing your trades, right? So thank you guys. Thank you so much.